Let's get straight to Michael Glennon now, the CEO at Glennon Capital, who's joining me now live here on set in Sydney. Michael, good to see you again.
Likewise.
Now, we've had these results up from BHP that Matt just took us through, and the stock is down, not hugely, but it is still down by just over 0.5%. We were just having a chat about your resource exposure. Obviously, you're focused on the small cap end of the market. You've only got around 10%.
That's
your
right.
Portfolio now in resources.
Look, we reduced our resource exposure last year, and we're at the point now where we're starting to increase the exposure a little bit. We saw commodity prices come back quite a fair way last year, but I think they've stabilised a little bit now, so it's probably time that there wasn't a lot of risk priced into a lot of the small resource stocks. So we're starting to see that with the share prices coming back, there's a lot more value entering in the sector.
So it's time to, I guess, relook at the space.
That's right, there's a lot more value there. We thought it was very overvalued last year, and so we sort of stayed right away from it.
What about the M&A activity? Because, of course, you know, again, at the bigger end of the market, we're talking Xstrata, Glencore, that sort of merger. Is there like...
I think there'll be more as companies try, you know, if commodity prices are lower and they try to get growth, it's always a good option to try and buy that growth.
Can you see any specifics there that are either on your books or not as yet that you're watching specifically that could well be takeover targets?
We don't sit there and try and invest on stocks that we think are going to become takeover targets. It's a hard game to play to try and get value out of you know, companies you think are going to be a takeover stock. They're generally you know, have something where someone's seeing value in them that's not being appreciated by the market. So we stay away from that game, try to buy resource businesses that have got really good cash flow and good operations, simple mines, things like that.
What is your top play in the resource space?
Probably we pay it a lot larger through the mining services businesses. So if you add our 10% we've got in resources to the mining services investments that we've got, it's probably about 30% of the portfolio. So the largest position we've got is Monadelphous, which is in the top 100 now. So we'll have to exit that as part of our investment mandate.
Completely?
Yes.
Yeah. Okay, so it has to be any stock that's out of the top 100.
That's correct, yeah.
On the ASX, of course. Let's talk about Webjet.
Yeah, Webjet. For their results day, it was a great result. I think we mentioned Webjet last time we were on the show, and you know, the results fantastic. It was in line with what we expected. Share price is up about 10% from December when I was last on. TTV, total transaction value, is up, you know, nearly 40%, which is fantastic in this market, and the business is doing quite well. You know, they announced that they were, you know, last year they announced that they were moving into accommodation. That's doing quite well for them, and we're very happy with the result.
Okay, we've already got 10% gains on you know, on the back of what you told us last time.
That's
up another percent today. How much more upside are we talking?
Look, we take a very long-term view on this stock, and we think that the stock could have easily 20 or 30% over the next couple of years, but easily should be able to achieve 10% in the next 12 months. Okay,
all right. Well, that's not a bad return. Let's look at SAI Global. Again, this is a company we talked briefly about last time. Correct, following up on older themes, always a good thing.
Yes, that's right. Look, SAI, we haven't changed our top picks from when I was on about a month ago, which is good, I guess. Not a lot's changed in the market. Very strong January for small caps, up nearly 8%. But SAI, it's a $1 billion company. It's got a good yield. It's 3% yield. Share price is $5. It's up about 10% from when we were on last time as well. So the business is performing quite well. Results should be out in the next 2 weeks, as we're in reporting season. We're not expecting any surprises there.
Yeah, okay. All right, 2 more stocks to look at. Reckon as well. We'll catch you on that particular stock next time.
Okay.
Thank you so much.
Thank you.
Good to see you again, Michael Glennon, with me there from Glennon Capital.